Hi everyone. In this tape, I'm gonna go over an example for activity-based costing. The example is about Celia Inc. that has two types of handbag, standard and custom. And the controller has decided to use a plant-wide overhead rate, which is basically traditional costing, which is what we learned in chapter 16, meaning coming up with one predetermined overhead rate and using that for all the products. So the activity-based is direct labor cost when they use the plant-wide overhead rate. The president has heard of activity-based costing and wants to see how the result would differ if this system were used. Two activity cost pools were produced, machining and machine setup, and they have given us the direct labor cost for each product and machine hours and setup hours for each product. And they told us that total estimated overhead cost in total is $342K, and if we want to break it down between the two activities, machine hours is costing us in overhead $222K, and $120K is related to manufacturing overhead for machine setup. Now, the first thing they want us to do is compute the overhead rate using what we did in prior chapters, traditional costing or plant-wide approach. So first, we're going to add up the total for direct labor hours for the entire company. In this case, 60K plus 120K is 180,000. Let's also do the machine hours total as well. So in this case, 3,000 machine hours, and setup hours are in total for both products is 600 hours. So this is normally the part that you have to do yourself. Sometimes the problem provide this to you, the totals. Sometimes you got to do the addition yourself. Now, computing the overhead rate using the traditional approach. Excuse me. Remember that the total estimated overhead cost is 342,000. Now we're going to divide that by the total estimated activity base of direct labor cost, which is 180,000, and the rate we're going to come up with is $1.90 for each hour of direct labor. So manufacturing overhead rate, predetermined overhead rate, or plant-wide overhead rate, we can call it either way, is correct, is $1.90. Now, so if we use $1.90, we would allocate out of the 342,000 total, 114,000 to a standard handbag and 228,000 to custom handbag. How did we come up with that? We took this direct labor cost that were given to us for each product, and we basically multiply it by the plant-wide overhead rate. The direct labor cost, if you remember, based on the facts, were 60,000 for the standard product and 120,000 for the custom product. Okay, so now part B, that was part A. Part B is asking us to compute the overhead rate using the activity-based costing approach. So in activity-based costing approach, remember there are 4 steps. The first step is coming up with the activity cost pool, which they already gave us. they told us there are two activity cost pools, machining and machine setup. So, and they told us and they told us what is the amount of overhead for each cost pool. 222K for machining and 120K for machine setup. So we're gonna put those in our Excel spreadsheet. 220K, 222,000 for machining and 120,000 for machine setup. Then we're gonna divide it by the cost driver. The cost driver was given to us here, the 1,400 and 1,600 for each product, which we added together ourselves, and we came up with a total of 3,000. And that's how we got the 3,000. So taking the machining manufacturing overhead cost divided by the 3,000 cost driver, our activity-based overhead rate for machining cost pool would be $74. Now we do the same concept for machining setup. Remember, they told us it is manufacturing overhead cost for machining setup. Machine setup is 120K, and the cost driver for machine setup, they gave it to us is setup hours, and for each product they gave us the how many setup hours it takes. We added together, we arrived at the 600 hours, and therefore that's going to be our denominator. The numerator is the 120,000 divided by the 600 hours of setup, and therefore our activity-based overhead rate would be $200. So every setup it's costing the company $200. And now we're going to use these activity-based overhead rates that we came up with in a step 3. So step 1 was coming up with the cost pools, step 2 was cost driver, and step 3 is activity-based overhead rate. Step 4 is multiplying the activity-based overhead rate, the 74 and 200, by the cost driver for that product. So for product, the standard handbag, let's go back to the facts. The standard handbag generated 1,400 machine hours, 1,400 machine hours, and 100 setup hours. So we're going to use those 1,400 machine hours and 100 machine setup hours, and we multiply it by activity-based overhead rates, and the result is how much of the total overhead costs should go to each cost pool. And in total, out of the 342,000 total manufacturing overhead costs, 123,600 should be allocated to a standard product under ABC method. Now, the same concept we're gonna follow for the custom product, the custom handbags. The machining cost pool, the machine setup cost pool, the number of hours that they were given us. These 1,600 and 500 was given to us. Here's the 1,600 machine hours for custom product and 500 hours setup hours for a custom product. We take those and multiply them by the same rates that we arrived here, activity-based overhead rates. Once we do the multiplication and add the result for both activity pools, we realized that out of the 342,000, 218.4 will go to, of total manufacturing overhead should go to custom product under ABC approach. And if you add these two numbers, the 123,600 and the 218,400, you will get the total manufacturing overhead cost of $342,000 that they gave us as part of the facts. $342,000 as part of the facts. They provided that to us. And you should get it, otherwise you made a mistake somewhere. Okay, now part C is asking us determine the difference in allocation between the two approaches. Okay, so let's go and look at the two approaches. When we were under traditional costing, standard product had $114,000 of manufacturing overhead allocated to it, and custom product had $228,000 of manufacturing overhead to it. How did we come up with those? Remember, we took the direct labor cost, which was the activity based, multiply it by the predetermined overhead rate, the $1.90 for both products, and how we arrived at the amount of overhead cost that should go to each product under the plant-wide or traditional costing. Both means the same thing. And again, when you add these two numbers, you must arrive at the $342,000, otherwise you made a mistake. Now, under ABC approach, standard product, the manufacturing overhead allocated to it was $123,600 in here, and custom product was $218,400. Now, if you add them again, you should arrive at the $342,000. Now, if you compare the two approaches, you will see that under traditional costing, we're not giving enough manufacturing overhead to the standard product, standard handbag. Therefore, we are basically, when we setting up the price, the selling price is not reflecting the true cost. Whereas the same $9,600 now, when you compare the custom products, traditional costing manufacturing overhead versus ABC approach, under when you compare them, you see that we have given too much manufacturing overhead under traditional costing to this product. And again, this will reflect our selling price. And if we are following traditional costing compared to our competitors that they're following ABC method, then we are not attracting our customers to our custom product, and we're selling our standard product cheaply. Now remember, the cost of implementing ABC approach is higher than traditional costing. Traditional costing is really easy because you only need one simple rate. However, the benefits of ABC is much higher if it will affect our product pricing in a meaningful manner, meaning the difference in spending money on ABC method outweighs the cost outweighs the benefit outweighs the cost. It's better to do ABC costing. Okay, guys, hopefully this helped you. send me your questions.